Good morning, everyone. In today's video, I'm going to go through all four of the indice markets so far and the trade activity we have and just how we're approaching the day a couple hours in now. Well, less than a couple hours, an hour and a half in. All right, so we'll start with the S&P futures and we'll start with our new scalper volatility box models. And in yesterday's video, I'd mentioned that it would be fairly obvious with that first hour test whenever the scalper volatility box were not the models to be using. We would breach our aggressive cyan lines before we have any capital at risk, and that's by 7 a.m., the first hour test, in which we're checking to see, well, which models really are doing a good job of accommodating price action, right? And we'd like to find the ones where we haven't breached the cyan line in that first hour, or the one where we've breached the cyan line and then we've bounced from there. So looking at the scalper models, that clearly wasn't it on the S&P. So we'll switch to a slightly more conservative model and just go straight down the line. So it's really scalper volatility box is the most aggressive. Then we have our aggressive, then our doomsday aggressive, then our conservative, and then our doomsday conservative. Right, so our next most aggressive models that are safer are the aggressive volatility box models, and even that stopped outside of our volatility box clouds. So the next one we have is our doomsday models. And our doomsday models, as we can see in the case of the S&P, fell perfectly inside of our volatility box lines, and we even saw a little bit of a reaction even though we didn't quite touch that line, right? All to give us more confidence in these models. Now, price just breached our cyan entry lines as price fell perfectly into our volatility box entry lines. We had an edge signal. We did not get an opportunity to re-enter at the cyan line. So similar to yesterday's video, once again, the idea of our rules and waiting for that re-entry and just being patient has not been working out in the recent past. But I'll show you where it has been working out in terms of focus. You don't catch all the trades, but the trades you do catch are slightly higher probability than just using the models on their own. But even in this case, you had the edge signal. If you are looking at being more aggressive, the idea I shared yesterday was using the zone between our gray dash line and our cyan line is that more aggressive area, which in the case of the S&P didn't work before we have already hit our target. But now if we switch on over to a chart of something like, say, the Russell, right, we'll repeat the same exercise. We'll start with our scalper models. Very clear in that first hour test before we have any capital at risk that these aren't the models that we want to use for the rest of the day. Then we go straight down the line again, right? Aggressive, same thing. We stopped outside of the box, so we'd like to go to our next most aggressive models, which are our doomsday models. We see that our doomsday models are doing a much better job of containing price action, right? Price fell into our entry line in that first hour, and we bounced from there. So now at this point, we're looking for a breach of our cyan entry lines and then an edge signal for a potential reversal opportunity, right? And we're on our doomsday model. So these are places where we typically see some really nice reversals for the rest of the day. So we'll see if that does end up being true for today's activity. But in the case of the Russell, we had price breach our volatility box entry line. We had our edge signal. We even had an opportunity to re-enter at the cyan line or better, well, a tick better really. So just the cyan line, but if you did use that gray dash line to the cyan line zone, you had plenty of opportunities as price chopped sideways before ultimately starting to break up higher. We've already hit our T1, and we're now on most of these trades on our way to T2, right? This is the one that's gotten filled. If I keep going down the line to the Dow, and the Dow was the more obvious, less volatile market today, right? So going through the scalper models here, we can see that with the scalper models here, we barely stopped outside of our clouds, and that's just with our most aggressive models. So our aggressive volatility box here is already doing a good job of containing price action in that first hour. We didn't breach either side cyan entry lines. We're now waiting for a breach, and in the subsequent hour, the 7 to 8, the one that just passed, we had price breach our volatility box entry lines. You had an edge signal. You even had an opportunity to re-enter at the cyan line or better in the case of the Russell. Already hit our T1, and now this trade is on its way to T2, which is currently at the gray dash line on the opposite side, a little bit above 25,180. And finally, the last market that we'll talk about is in the Nasdaq. So with the Nasdaq, if we again start from the same process, our scalper models, very obvious in that first hour test when we determine the volatility box that, hey, these aren't the models we'd like to use for the rest of the day. Switch on over to our more aggressive ones. Not these ones either. Go straight down the line to our doomsday aggressive. And even our doomsday aggressive models technically did break outside of our volatility box clouds, which took us then to our conservative models on the Nasdaq, right? And that should then be a very easy observation that you can call out. The S&P, we're on our doomsday aggressive. The Dow, we're on our aggressive models. The Nasdaq, we're on our conservative models. And the Russell, we're on our doomsday aggressive models. And so very easily you can rank them, right? So we know that the Dow is the least volatile, the Nasdaq is the most volatile, and then the S&P and the Russell are in between in terms of the volatility models to use. And just like that, you have a game plan for the rest of the day, 30 minutes into the market open, at least for the four major indices, and you get to start looking for breaches, which we've had a lot more recently, especially with the scalper volatility box models. 8 breaches yesterday, and today today so far, just a few hours into the day, we already have a breach and a nice winner where we've respected these models. And finally, for the Nasdaq, you did get the edge signal. You did get an opportunity to re-enter at the cyan line or better while the trade was still valid before we've hit either our stop or target, which in the case of the Nasdaq, this is still a completely open trade without it hitting even the first target, which is 60 points on the opposite side from our cyan entry line. All right, so hope that video helps. Good luck trading the rest of today, and we'll see you in the next update. Take care, everyone.